Good morning. Welcome everyone to Admiral Markets. Thanks for joining us today on Thursday, the 5th of June. We're going to take a look at the Forex market, of course, today. First of all, this disclaimer though, the material here is intended for a global audience. Please take into consideration that the info in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Alrighty, thanks for your attention. Also, the risk disclaimer, of course, explaining that trading for exchange and global financial markets is considered very high risk. It might and may not be suitable for all investors and traders. Take a look at this disclaimer here and seek the advice of an independent financial advisor for more information on that. By continuing watching this webinar, you agree with the disclaimer and the content mentioned here. And here too, we thank you for your attention. So today our focus is going to be on Camarilla and intraday trading, which means we can still use this module because it's actually a module for all types of trading. So it's just like a checklist, in fact, prior to entry. And the checklist is just useful because we preferably want to avoid kind of like jumping in and chasing a trade. You preferably want to have a vision of what you're looking for, and then a confirmation of what is indeed what you look for, and then hunt for an entry. That way you kind of avoid chasing something that looks good but it's just decided on let's say a candle moving, and you see momentum and you think something is going to happen, but it's not really well documented. So it's better to take it with a step-by-step approach so that we avoid this kind of chasing the market and getting emotional when we see something happening, and etc. This checklist keeps us in check in a way, so we're not fooling ourselves. So with that warning behind us, make sure to take a look at Admiral Markets social media. And the Forex calendar is going to be quite spicy today because we got pound and euro interest rate decisions. And personally, I don't trade the pair with interest rate roughly about, a decent time prior to that, I don't know, 8 hours or so. Well, obviously that's within 8 hours because it's like 4 hours from now, so I wouldn't expect much movement anyhow. But I avoid trading a pair, or I avoid trading a currency and all of its pairs if it has interest rate. That's the same for the CAD yesterday, actually. We had CAD interest rate, so or the odd on Monday, for instance, etc. But we still have other pairs to look at. We can still look at the pound and euro dollar. I just wouldn't be trading it personally. We have other news, light and medium news, like retail sales here and bond auctions. French unemployment rate ticked down 0.2. That's good for France, 10.1 now. And German factory orders are up. That's always good news. So we got the Camarilla here. Not only that, we got pivot points too. So let's take a look. Euro dollar finding support at, well, I'm not sure actually, at these bottoms maybe, right here. Otherwise, it's pretty sideways zone, in fact, if you look at the hourly. Oh, sorry about that. Um, how much did you, I mean, roughly, where did you hear me? Or miss, or where did you lose the sound? Sorry about that. Okay, cool, cool. Start of the euro. Good. Sorry about that. I don't know what happened there, but no, the euro dollar, basically, I was saying that we have breakout potential above daily pivot, for instance. I mean, first of all, I don't want to trade the euro dollar myself, but if I analyze it, and if it were not an interest rate day, then there's maybe space between the daily and weekly pivot, but I don't like it too much because price has bearish moving averages. Price is still well below the daily, monthly above it, weekly above it. So it looks more like a bearish sentiment to me than a bullish. However, if we do break, there could be a retracement, kind of a correction, reversal idea, trade setup, like maybe we had here, for instance, right? Those things can happen. I would personally not be too keen on trading it, but we have an ATR high here, for instance, an H5 or an H4 and a weekly pivot. Those things could be reached, and the day R1 confluence there, but considering actually looking at the price action, if you look at this hourly, 7 minutes to go, if this is a big wick, that could be a shooting star right at the daily pivot. If that does close like that, actually confirms the bearish momentum biased or analysis I have on it, and could be a rejection there. But let's see. Candle isn't closed until 7 minutes to go. What would be more aligned, I would say, is a bearish breakout here, either to the L3 and then down to the daily S2, for instance, or the L5. That would be more aligned with the momentum, I would say, overall here. If we look at a bigger part of the chunk of the price action, you can see it's quite sideways. That itself really doesn't look too appealing, does it? But we could finally get that breakout like this, let me say it this way, or we might get a bigger retracement back to these tops. Those seem to be the plays here at the moment. For the euro dollar, I really don't have anything to add, I would say, besides that. At the moment, there's some good selling pressure, but we got 6 minutes to go. You can take a look at the daily for the fun of it. Daily still looks bearish to me. Yes, we do have sideways move here, but none of these candle closes could close above this resistance. None of them. You see that? So really, a daily close above 136.40 is needed before the bullish sentiment, before any bullish sentiment or change of structure can be noticed. That bearish candle, this candle right there, of the daily candle of the 28th of May, is still the prime candle. All these other candles, 1, 2, 3, 4, 5 of them, have been contained within that one bearish candle. We did have some intraday push through it. We had a small wick here and a small wick here, maybe even here. Don't think so. But those are just pokes. We don't have a close above it, which means that the bears are still in control, in my opinion. It's just that they're not pushing it lower either. But definitely bulls are not in control. So more bearish sentiment here. Bears have been in control ever since here, because if you look at all these candles, none of these candles had ever had a bullish signal of control. Even these bullish closes, these bullish candles didn't have closes above the previous high. Now the weekly is looking a bit different because we do have a doji here on the weekly. So that is showing a bit more indecisiveness. So that would be a bit more cause for alarm. So I have to see. We do also have divergence between these bottoms. It all makes it a bit, all these things on the weekly and the divergence on the 4 hours specifically make it a bit more difficult to trade any direction, in fact. So yeah, overall it's quite messy. Daily chart, I would say, definitely has the potential to break out. And looking at the hourly too. The 4 hour and the weekly are showing a bit more mixed signals. Pound dollar. If you have any questions about on the euro dollar, by all means, let me know. Pound dollar hourly. Let's see, we're still contained, just like the euro dollar, below the H3, above the L3. Now, we know that the Camarilla is always looking for bounces or breaks at those H3s, at the H4s and L3s and L4s, basically. H3s and L3s, right, are considered range levels. H4s and L4s are considered the breakout levels. That's what the Camarilla is. It's a pivot point indicator, and it provides extra value besides the R1s, R2s, S1s, S2s. If you're joining us in this webinar for the first time, or if you're relatively new to our trading webinars, or if you've never joined a Camarilla indicator webinar before, please let me know so I have an idea. Otherwise, I'll assume that everyone has joined at least regularly. So moving averages are quite flat. Why are moving averages important? Even if we look at Camarillas, just to see what the sentiment is, what the direction is, and if a breakout above an L3 or below an L3 or above an H3 would have potential. So that is why. That's why it's still good to have them. Now we have a lot of pivot points on this. We have a standard pivot point, which basically looks at daily levels, daily pivot point levels right here, the daily pivot point. We have the weekly, the monthly pivot point, plus we have the daily R1, the R2, the R3, the S1, S2, S3. These colorful lines are the ATR levels, and these L3s and L4s are the Camarilla pivot point levels. So I have one, John is new to Camarilla, so basically what I try to use with the Camarilla is, with the other pivot points, is to get an idea where major intraday support or resistance levels are, and when we can expect breakouts or maybe bounces and rejections. For instance, if we have a 1 hour wick right at the H4 and weekly pivot point confluence, obviously the more confluence at one level, the stronger that zone is. If we get a 1 hour wick there, like for instance we are getting on the euro dollar chart at the daily pivot, if we would have, for instance, the same, you see this is a shooting star at the daily pivot. Now I'm not saying that it should necessarily be traded, but the timing of this setup is not good. I would skip it, as I said. But just to give you an example, if you see a shooting star like that here on a pound dollar at the weekly pivot points, at the daily R1, and at the H4 confluence, for instance, that's how you can use Camarilla and other levels to gauge that, okay, that's a strong resistance. We see a price action candlestick pattern signal at that level. That would be a cause to go short upon the candle close, upon the candle retracement, or upon the candle break of the low, for instance. Or you can zoom into a lower time frame and take a break of a smaller bottom on the 5 or 15-minute chart. So that's how you can tackle basically and use these Camarillas for bounces. You can also use them for breaks. And if you trade breaks, then I would use the moving averages. You don't really need moving averages if you're trading bounces. If you're waiting for a candlestick pattern at support or resistance, really it doesn't, in that regard, it really doesn't matter that much what the moving averages are saying. The moving averages will have more value and give more guidance when we're maybe breaking above H4. If the moving averages are sloped at a good angle, then the likelihood of a successful breakout is increasing. Nothing is a guarantee, nothing is 100% though, of course. But in this case, a breakout above this top H4 weekly pivot point could see an acceleration to the confluence of a DR2, H5, and monthly pivot point. So that's why I'm saying there's, what I would say is there's a breakout, some breakout gap above H4 up to H5 and the other confluences. For instance, then the moving averages will be useful. So the opposite, how about the pound dollar? The moving averages are quite flat. They're getting some upside momentum. You can see that probably a bit better on the 15 here. So I'm not trading the pound dollar either, but we are slowly but surely getting some upside momentum. A break below the daily pivot point, maybe some space here and here, but I'm not trading the pound dollar either. So daily chart quickly. Bit different because we did have a bullish close above this candle. And after that, we've never seen a bearish close below 167.30. So I would say for bears to get back control on this daily chart, we would need a daily close below that 167.30. This was a substantial intraday wick on the daily chart. So it's a bit of a seesaw here. Wick at the weekly, a wick at the daily. In that regard, price is quite choppy, moving choppily within these two levels, and the monthly too. Not set up all too well. But what I do like is that if price does get up to the weekly, as I said, I actually like that particular. If it were not for the pound interest rate, I would love to wait for price to get up to this level to short it. That seems interesting, but only upon the confirmation. Let's see. The L3 is the Camarilla. All these H's and L3s are part of the Camarilla setup. So basically, if price starts today within H3 and L3, between them, it has its range level still above and below it. If it then breaks out of it, then it could be in a trending mode. As long as it stays in between these, it's more in a ranging market environment. Let's take a look at another example. We have L3 providing support, H3 providing resistance today. I believe today, or was that yesterday? No, wait, sorry. Well, today, to roughly, this is today's price action. Also, the Aussies, what I don't like about these Aussies is, or was the fact that they were bunched up. The price was right in between the daily and the weekly pivot point yesterday. Now it looks a bit different because price is actually broke above it and hooking back and bouncing off of it, which means it looks like it's getting support off of these levels, so that will be changing the dynamics a bit. We do have slowly but surely bullish moving averages, although very, very choppy price action connected to that. We got some confluence again between H4, DR1, and the monthly pivot, right about 93. So this seems interesting to me. Looks like we have sufficient space to move up. If you look at it from this perspective on the 15-minute chart, upon the break of H3, we have, well, not much space maybe, but it looked like more, but it's about 15 pips, not a ton of space, but it's looks a bit more than it really is. Let's take a look at the 5-minute chart. Engulfing twins on the hourly. I would probably look for a close above that red line. That would probably signal a decent chance that that the bulls are back in control. But because of the lack of space, that is, not that much space here. If we do get a close above that red line, I would still want a bit of a dip before buying it again. A bit of a retracement so that, let's take a look at the hourly again, so that the R2R is decent. If we see a break and a pullback back to 92.84 with a stop loss below at 75, that's 9 pips, 84 up to 93.04 is about 20. So that would be roughly a 2-to-1. That would still make sense. So we can keep an eye on the Aussie. Not a lot of space, but maybe there's a method to wiggle in something there. Kiwi. Same story as the Aussie, actually. It has bullish moving averages. It has a lot of space up to the weekly pivot. It is still above the daily. So that's space to the upside. Broke daily R1, so next target will be that R2 and the confluence at H5. So we're probably going to get some retracement. The stochastics has reached the high level here, on the 15 at least. Also hourly engulfing though, so that's something to be aware of. Let's see, on the daily chart, definitely bears in control. Bit of a wick yesterday, but the break of yesterday's high could just be an intraday break, in fact. I wouldn't be too concerned, unless it closes today above that daily high. I wouldn't be too concerned about that break. The 4-hour is showing bullish control though. Daily bearish control when looking at price action. Looks like we're going to get a correction back to about this support level. Maybe like this and get a bounce here. That could be interesting. If we get a bounce there, move up, make a small mini top here on the 5-minute chart, move down again, and then start to break like that, that could be interesting. Because otherwise we do have the moving averages are bullishly aligned, despite the fact that the daily candles are in alignment. But you never know. Today, you could just see an intraday move up to the R2 and then see a sell-off back and close like this, and it was still worth looking for that long, for instance, right? And by the way, for that matter, still worth looking for a price action signal on the hourly. A rejection wick at this level would make sense too, because we know that the daily is still bearish. So looking for bearish signals at the H5 also makes sense. So those would be the two options. This upside is limited in the sense it's like a short, small intraday trade. This rejection here could be pretty interesting for even longer perspective. even like a swing trade perspective, potentially, although with the NFP tomorrow, that's a bit risky. But if it were not to have, the significant news events that we are witnessing this week, then that's, how you can maybe turn an intraday trade into a swing trade if you trade off of a rejection like that and you get followed through throughout the week, for instance. So let's take a look at the Kiwi in 3 minutes. We'll see if the 50-minute candle here is again bearish, then the bears have control, and we'll probably see a move back to support. That is good because then we'll get maybe a cheaper spot here somewhere to trade it up to 84.60 for about maybe 20-25 pips potential there, versus a small risk. So similar to the Aussie, we can keep an eye on it. Dollar CAD. Let's take a look. Remains bullish. Bearish price action at the moment. 15 is not aligned with the hourly, so for the moment I would just skip the CAD, I guess. Doesn't seem that interesting to me. Dollar yen, I would skip too. Also doesn't look that interesting, unless it gets all the way back to the monthly and weekly pivot point and bounces off of that. That would make things different, but otherwise, looks like we had a good run up, but looks like also that run up might be stopping. I wouldn't necessarily speculate on the currency pair indeed making a retracement, although I do think it will. I wouldn't necessarily that keen on trading it to the downside here for the moment because we are close to L5 already, and the daily S2, I don't know, doesn't seem that appealing to me. Also, this one doesn't seem upside, not either, because we're due for a correction considering this 5-wave up with divergence between these tops. Classical moment for correction. The only thing that seems interesting is a bounce off this pivot point confluence. And that would be equal probably, let me check though, not exactly, but it's in the neighborhood, of course, always to some fib, but not a very precise confluence, but I guess roughly speaking, as always, we can expect maybe a bounce off 61.8 or 78.6. Fibonacci retracement level. How about the euro yen? Broke this trend line here. That was a good break. Was heftily fighting against this monthly pivot point, but couldn't break it. Let's see, what do we got going here? Well, we have a break of that trend line, resistance at the daily and monthly, but price didn't even hook back that far. Break of the trend line, stopping already at the DS1 and finding some downside. If price does get up to the daily pivot or monthly pivot point, we see that's a nice confluence. A rejection wick at that spot would have been perfect, but we didn't get it. We actually have a doji here at the moment. So I'm curious how this hour is going to end up. If we get a close below, for instance, last hour's low, that would signal a pretty strong likelihood that bears are back in control. At the moment, I wouldn't say as yet because we had a wick here, a bullish candle. This is a rejection wick, but I would like to see the follow through still to make sure that that is indeed so. So close below that 139.44 would lead for a decent probability to the downside, but we already reached Ace 2. Could be a very trending day on the euro yen. Who knows? Maybe a break below it still. 15-minute chart. Would have to see a break below this for an extension down to 139 in fact. $15 is pretty bearish too. Yeah, so I would rather wait for a hourly close below that level and then look for a hook back on the 15 and then take the break after that on the 5. Something like that. It depends, of course. This is just an example. It is trending, but we have to, of course, measure if that trend can continue. What could also happen is that this is a hook back like that up to the resistance and then down again. Pound yen is also retracing just like the euro yen. It still has a bit more support below it though, and pretty close by too, so that doesn't look as appealing. We do have a Harami the previous hour. Moving averages are not aligned though. Probably need the same thing. A close below that would make it a decent potential for downside. Odd yen is definitely not aligned. It's just going sideways. I would skip that one for the moment. Pound odd, let's see. Engulfing to the upside. This is not so interesting. It too has actually weekly, monthly, and daily pivot points right in between. It could be a good breakout here. Actually, we had breakouts yesterday already. Oh. Depending on how you draw the trend line. How was it? I drew it like that. The breakout didn't go out too far though, so we can redraw the trend line like that and draw a trend line like that. It's like in a triangle, in fact. Still looking for the breakout, the real breakout, a full-fledged breakout. Below this daily pivot point, that could be good because we could see a pretty good space down to L3, L4, and maybe even L5. I think that that has, if it does break, I like that pound odd potential. Unfortunately, the pound has the pound in it, which means it has the interest rate decision. But if that, after the interest rate decision, if that still has some real estate left here, has some space left, then that looks good. I like that pound odd space here. Does euro odd show the same? It does actually. It's breaking to the downside. It's not getting a lot of momentum as yet, but it is finding some resistance at this daily and weekly pivot point. That's good. Looks like a break, pullback, potential go, maybe. With the interest rate, we never know, of course. Could oscillate back and forth here. But very good moving averages to the downside. This euro odd break to the downside is performing well. So let's see. Anyone who's in that trade can still stop that, but we need still a confirmation of this being a top right there. We do have a doji right at the daily weekly pivot, but this is actually something that, just like the pound odd, is also very interesting. In fact, it's a pity that we have the interest rate because we have a reaction at the daily weekly. So that is a good thing actually. A confirmation, although even tradable upon the doji here, more of a confirmation would be an hourly close below last hour's low. If we get a close there, then we should see that breakout to the downside. Just like the pound odd, we have good downside space too here. So that looks pretty interesting too. I like those euro odds and pound odds at the moment. Good. EuroCAD, I'm not a big fan of these CADs at the moment. Let's see, Euro New Zealand. Also looking pretty bearish. Euro New Zealand 2, Pound New Zealand, sorry. Dollar Swissy, messy. Rising wedge, not interesting. Pound Swissy. Also stuck in between those pivot points, in fact, the weekly and the daily. Let's take a look at how the daily candle looks like. Daily chart. Also a bit of a mixed picture. We do have the upward momentum, but no clear price action winner at the moment, on the daily at least. Weekly looks more bearish, in fact, because we had a bearish week last week. So probably a break of this level would have a decent chance of follow through for downside. That would be a decent trigger probably for some intraday downside to these targets, for instance, these fib targets. The monthly pivot point is a bit annoying. I wanted to say that could be some, good breakout to the downside, but with a monthly pivot point, that's a bit annoying. But okay, what can you do? At the moment, I would say a bit too much. At the moment, price is quite choppy. Anyhow, let's see, New Zealand yen. Also quite choppy. We had a good break, pullback. That pullback is something that I was thinking of trading. I didn't catch it, but the pullback, the follow through wasn't really getting too far before we made a retracement again. So those are things we never know. You get followed through a bit, but not as much as you hope for really to get to the target. At least for a swing trader, not. We did have moving averages, but there's no guarantee. So that's always the fine balance we need to find in approaching the market, right? Having, of course, some idea of a target, but we never have a guarantee that it will get followed through. So it's good to adjust our trade management plan realistically, giving some time for trade development, but not too much. Why? Because if we give some time, we increase the chances of the trade moving our way. If we give too much, obviously, it would also be a disadvantage. Preferably, I like to give, I don't know, anywhere between 3 to 4 bars upon the entry, the time to develop my way. And upon exit, if it doesn't go 5 to 6 candles, then usually that momentum is gone. If it takes more than 3 to 4 candles, the chances of it developing our way are not as good as they are. So let's take a look at this New Zealand yen, for instance. If we got a rejection here, for instance, this wick here, you got 1, 2, 3, 4th candle, but we did have it the 5th down again. You see, yeah, it's always between 3 and 5. You have to. It's always a bit of a balance there. But roughly speaking, you had at least the first 3 candles go your way and the 5th one too. So there's a decent chance that it will get some follow through. Now, that's good. So you can move it then to break even, right? If you have this already, this many pips up, for instance. Only 25, but obviously it moved your way, it broke the bottom. There's no need to hang in there anymore, right? You can take the risk off the table because price is moving your way. It should continue or else something else is going on, and why keep the risk on the table, right? There was a reason to take the trade here, but if it retraces after it dips down, that reason is not valid anymore. So why keep the risk, right? So now you can see that 1, 2, 3, 4, 5, 6 candles here didn't break that low, and indeed we get a bigger consolidation. And at the moment, it's about 19 candles. Actually, you use the rejection yesterday, so looking more bearish, looking at the daily chart. Looking at lower time frames, a lot of consolidation, in fact. Doesn't look that great. Let's see. The euro dollar, pound dollar. Sure. Let's take a look at that. Euro dollar and pound dollar. Let's see. Yeah, euro dollar. I'm not a big fan of it. I mean, if there would be no interest rate, then I would like the shooting star at the daily pivot point. But with the interest rate in play, you never know. That signal is not that valid, is not that strong as I would say normally, because of the fact that a few hours from now we have an interest rate decision. The market will not react to that as much. In general, though, we could, depending on the interest rate decision, we could see probably a move up to confluence here of the weekly as pivot point at the R1 at 136.25 or up to even 136.40. That's counter trend, or a breakout below 135.80 down to about 135.90 down to 135.70, maybe 55 here, downside break. That would require a break of this bottom too. That would be more trending mode. This would be more reversal mode. I also like the fact that we could get a price action signal, candlestick pattern at this weekly pivot. That could be interesting, or, well, it could be a bit interesting. I mean, you still have then the daily below us, but would have some potential. If we get obviously back to here, we could have another sell-off like we had here, potentially. So that's always has its merit. In general, I'm not a big fan of the euro dollar, though. Pound dollar, would like the same, to see resistance here at rejection here at resistance. That would be neat. But we could see upside until that level and then downside from that level. I like the euro out and pound out a bit more at the moment. Yeah, otherwise downside, let's see. Doesn't look that likely because we've got bullish moving averages. I would need to see price action show that potential. Doesn't seem that likely at the moment. Actually, if you look at the moving averages, we have a potential breakout to the upside. That could be a small trade. I like the rejection at the 167.80 potential more, but I would like to see confirmation, as always, before assuming the price will stop there. Let me take a look at Swiss yen long. Bob is asking about Swiss yen. Let's take a look. I also want to take a look at odd Swissy, actually. Specien, let's see. Yeah, that has major resistance above it, the daily and monthly pivot point confluence at 114.50. That already alone would be enough for me to be not that interested in longs at the moment. There is upside momentum on the 4-hour, certainly. I mean, from a daily perspective, it looks a bit, it doesn't say so, but it looks like a bit of a shooting star at the monthly pivot. That would be a bit worrying for me from the long perspective. Yeah, so I guess simply put, that would be enough for me already to really not investigate further. Very, very shortly summarized in a way. If it were able to break through it, that would maybe be something else. Or of course, you know, if you look at it from the opposite perspective, if you see a big rejection week here at that confluence, that could actually be even some potential for maybe some more reversal, you know, in that regard from those levels. If you look at the 4-hour candles, this is 1, 2, 3, 4th candle that hasn't broken this high. So far, we've had every 5 candles we had a break. So the bulls have been in control since this bottom. Because look, we had higher highs and higher lows most of the time. There's an exception, of course, when we had 5 of them here, but the 6th did break. So I would say we could probably, if we see 2 more lingering here, it's starting to look like a head and shoulders, roughly. And then this could become indeed a resistance level for that fall of that head and shoulders. If we have the time factor of another 2, 3 candles, right? This one closed plus another 2, in combination with the fact that we have a daily and monthly pivot point there, that could be a rejection level. Now, if that doesn't happen, then we should see price break above this level, I would say, before I would get a bit more interested in upside. The weekly R2 is also pretty close by. Yeah, that's about it, I guess. So I hope that makes sense. But that's what I would be thinking at the moment. This odds Swissy is still within the triangle. Looking at it from a chart pattern perspective. Something like that. Pivot point also right in the middle of the triangle. That's funny. Okay, this could break really, literally either way. It has an L3 below it. It has an H3 below it. It has the pivots right in the middle of the triangle and the middle of the H3 and L3. So it seems to be perfect harmony and perfect balance. The moving averages are flat. It seems to be totally neutral. It's flat. Absolutely sideways. As neutral as can be. That's quite funny, actually. So, yeah, maybe there's a bit of a bias on the 4-hour chart to one side or the other. Not sure. Even these charts it's difficult to say which one has a higher chance. I wouldn't dare making such a analysis. So, no, this looks it's funny. Just a very symmetrical triangle with a lot of balance in that one. Anything else? Maybe we're a bit, quicker than usual, I would say. John, you can send me an email, and I will send it to you. And I'll write down my email address. So there you have it. No problem at all. Does anyone else see something maybe that's interesting on a more exotic cross, maybe? How's New Zealand doing? Let's take a look. Yeah, it had a decent breakout yesterday and the day before, I think. Last week and yesterday, I think, or Tuesday. It has bullish momentum, but there's a bit of divergence between these hourly tops, so that makes it a bit worrisome. And therefore, I wouldn't be too interested in either side. We have a lot of momentum to the upside, but we have divergence, so I would probably still be more inclined to just sit on the sidelines, actually. There is the bullish daily candle, that's for sure. What could happen is a bounce at the daily S1 and the H4, maybe here the confluence. That could be maybe something. I don't know. Not that great either, though. But or maybe better bounce right here at the weekly and the daily S2. Let's see. ADN is arranging. John says. Let's take a look. Yep, big wick here. Either side, bulls and bears doesn't really look to have control at all. So yes, you're right. It is ranging. USD. I'm not sure if I have that one. Oh, I do. Let's take a look. Alrighty. Mm, mm, mm. Pivot and daily and weekly pivot of it. And the 4-hour was definitely a big uptrend. I see what you mean. Daily too, in a way. Doesn't look like those bulls are much in control. We had two Haramis, apparently. A very bearish day yesterday. I would be absolutely not inclined to say that that bearish day wouldn't have a. I would be careful of this bearish day. Let me say it this way, because that could certainly be important. Weekly is definitely bullish, but yeah, that's a bit of a mixed picture, in fact. Yeah, that's a bit of a toughie. We got weekly bullish candle, but this week has only been retracing downside. Too much of a mix. I would have to see price above the W in the daily at least. Otherwise, I would seriously be cautious of it to the upside. And in fact, if anything, it looks like a good resistance zone to me. I don't know. But yeah, I wouldn't be that too inclined to trade it. To me, the daily doesn't have control. Although the weekly is in control, daily not, and that's definitely a bit worrying for me if I would be bullish. So as a bear, I would be worried about the weekly candle maybe a bit. So it's a bit of it's quite a mixture. I do think though, considering this down momentum, that daily and weekly pivot is something that shouldn't be underestimated. So I would be cautious of that. Yeah, oh sorry, Bjorn is actually saying the same. I didn't read his message correctly. He was saying, but it's not time to buy here, in fact. Yeah, so I agree with you, indeed. Yep, I see the same. Let's take a look at the dollar Czech crown as well, quickly. Similar to, I would say, the dollar SEK. I don't know, maybe not, but let's see. We'll find out. This is quite choppy, in fact. Has been moving up a bit. Not much movement here, as you can see. Let's see, anything else? Nothing that pops up in my vision here. So I don't know if you have any questions. Otherwise, be aware that tonight we don't have our usual webinar. It was on Tuesday. Sorry about that if you missed it therefore, but the recording should be available soon. Maybe it already is. Let's take a look. No, not yet, but I'm sure soon it will get there. Otherwise, next week, of course, we have our usual schedule. As always, the recap on Monday and then live trading lab on Tuesday. So if there are no questions, I guess that would wrap it up. I mean, there's, from my perspective, nothing else to discuss, but just be careful about that, the euros and pounds. It's always, difficult with those interest rate decisions. No questions? Okay, folks. Well, thanks for being here in any case, and spending your time with us, of course. And wish you good trading the rest of this week. Let's see how the news events will set maybe a trend up for June. Who knows? We'll find out soon. And have a great day. Cheers.